fighting inflation to bank runs and on. His leadership at the Fed has been a steady hand and one of the all-time greats. Before coming to the Fed, Chair Powell was a visiting scholar at the Bipartisan Policy Center in Washington, D.C. He first entered public service at the Treasury Department under President George H.W. Bush, with responsibility for financial institutions, the Treasury debt market, related areas. Outside of public service, Chair Powell has worked as a lawyer, an investment banker, and been a partner at the Carlyle Group. In addition to his service on corporate boards, he served on boards of charitable and educational institutions, including the Bendham Center for Finance at Princeton and the Nature Conservancy of Washington, D.C. and Maryland. He is a D.C. native, received a BA in politics from Princeton and a law degree from Georgetown University, where he was editor of the Georgetown Law Journal. Please welcome to the Economic Club of Chicago again, Chair Jerome Powell.
兄弟们来了啊！刚才不好意思，我不知道为什么直播软件把我他妈踢出来了。我们现在开始啊。
Thank you and good afternoon. It's great to be back in Chicago. And thanks for that kind introduction, Austin. So I'm looking forward to our conversation, my conversation with Professor Rajan Raghu. But first, I'll briefly discuss the outlook for the economy and monetary policy. So, at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to our discussion.
畜生啊！讲他妈10分钟不到，跌这么多。
Thank you very much, Chair Powell, for those remarks. I look forward to your elaborating on them in the course of the next 40 minutes or so. I understand last time you were here, Melody Hobson interviewed you. Well, I'm a poor substitute, but I'll try and compensate in the quality of the questions. As you repeatedly emphasize, communication and transparency are very important for the Fed. I would like to get more from you on some of what you just said. As a former central banker, the only sort of caution I've been given by the Economic Club is to not lapse into central bank speak. So I'll try my best not to do that. Let me start by saying you've guided the Fed through some really difficult events, including the pandemic, the dash for cash in March 2020, the great inflation, the banking crisis centered around Silicon Valley Bank. And then over the course of the last year, we've seen a growing possibility of a Fed-engineered soft landing. And now it seems like everything has changed. In the course of a couple of months, JP Morgan has shifted to estimating the probability of a recession this year at around 60%. What do you think about all this?
Well, first of all, thank you for being here today. It's a pleasure to be here with you. Actually, the appearance I did here was my very first appearance as chair 7.5 years ago. So it's great to be back. And I would agree with you that it's been an eventful 7 years. Putting it mildly, I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%, unemployment remained in the low 4s, close to mainstream estimates of maximum employment, and inflation came down and was running at the end of the year around 2.5%. That's the economy that we had, and I won't decide how to characterize that, but that's where things were. Where we are now, again, to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. So that's the strong likelihood. And my hope is that we'll get through this and get back. Well, we're always going to be aiming for maximum employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year, and then, or at least not making any progress, and then we'll resume that progress as we can.
Let's talk a little more about tariffs. I mean, you've recognized that some of the effects of the tariffs will be one-off, transitory, but you also have said that perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent? And what would make them have effects on growth?
So in a kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up and that's it. But that can happen in some circumstances, but it depends on a number of things which we don't know yet. And I would point to a couple of them, or three of them actually. One is just the size of the effects. And as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation. And the third is just what I mentioned in my speech, which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take. And indeed, our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the effects of tariffs on quantities? With the level of tariffs that, for example, have been currently applied on China, there's a fear that the supply chain may get disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected just prices?
So I actually had dinner at the Chicago Fed last night, and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand. And it was a prolonged shortage because production couldn't keep up. And that led to an extended period, one of the things that led to an extended period of inflation. So when you think about supply disruptions, that is the kind of thing that can take time to resolve, and it can lead what would have been a one-time inflation shock to be extended, perhaps more persistent, and we would worry about that. In this case, you can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that process will take some years, and that the inflationary process might be extended. So these are all of this is highly uncertain. We're thinking now, really before the tariffs have their effects, as how they might affect the economy, and that's why we're waiting really to see what the policies ultimately are, and then we can make a better assessment of what the economic effects will be.
Let's move to immigration. You talked about the labor markets being in reasonable equilibrium right now. Of course, what we've seen over the last few months, months of the previous administration continuing into this administration, is immigration has fallen off considerably. What's your sense on how that will affect the labor market?
So part of why growth was so strong in the last couple of years was just very high levels of immigration, and those people went to work. The economy hired them. You know, there was a lot of demand. We were still working off the labor shortage. What's happened since the prior administration changed their policy, as you mentioned, immigration has fallen very sharply, and therefore the growth of workers has really stopped. It's really stagnant. But at the same time, demand has also fallen. And so demand for workers, so payroll job creation has also fallen. And they've kind of fallen in tandem, which is why the unemployment rate has been pretty stable for about a year. So in a way, demand and coincidentally, perhaps to some extent, demand and supply for workers has fallen. In terms of the effect on the labor market, right now we're still at full employment, and labor force participation is still strong. Wages have moved back down to levels that are now pretty sustainable, given an assumption about productivity. So the labor market's in a really good place. Longer term, you know, the effects of immigration are not thought to matter much for inflation. The effects on demand and supply will more or less cancel each other out. So we wouldn't expect there to be a big impact on inflation.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs. How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is, of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect a workforce of 170 million people materially. In terms of the cutbacks in funding and for science and things like that, we do see in areas, particularly in cities that have a lot of universities and research hospitals and research institutions, we're really hearing significant layoffs and significant impacts on employment. I don't know how much that will total up to. And of course, in addition, cutting back on scientific research may have implications for economic growth, for productivity, for health, for all kinds of things. But those are very difficult to estimate in real time.
Now, given that we're talking about the future, you may be confronted in the not so distant future with both higher levels of unemployment as well as potentially higher inflation. And of course, the policies that each one requires could be different. You talked a little bit at the podium about how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right. So most of the time, when the economy is weak, inflation is low, and unemployment is high, and both of those call for lower interest rates to support activity, and vice versa. So most of the time, the two goals are not in tension, and they're not really in tension now. The labor market is still strong, but the shock that we're experiencing, the impulses we're feeling, are for higher unemployment and higher inflation, and our tool only does one of those two things at the same time. So it's a difficult place for central banks, to be in terms of what to do. And so the best we can do is we actually have a little provision in our consensus statement, which is the thing that we vote on to embody how we approach these questions. What we say is we will look at how far the economy is from each of those two goals, and then we'll ask, might there be different paces at which they would approach those goals? We'll look at those things and think about them, and we'll make what will no doubt be a very difficult judgment. Again, we're not experiencing that now, but we could well be in that situation, as I mentioned in my remarks.
just want to pick up on a word that is often used today, uncertainty. As a respondent to a Dallas Fed survey said, I've never felt more uncertainty about my business in my entire 40-plus years career. The worry today is not just about immediate policy uncertainty, but an entire change in the US's economic philosophy. Not just policy uncertainty, so to speak, but structural uncertainty. You know, one of the effects, as you've pointed out, of higher levels of uncertainty is that firms postpone investment. For instance, even after the tariffs stabilize, firms that contemplate reshoring production facilities will hesitate, not knowing if the tariffs will be reversed in the future, maybe by the next administration. How do you take such longer-term uncertainty into account in your policies?
Let me just agree that what comes back very strongly, and everyone will understand this. These are very fundamental changes in, long held in some cases policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago, so there isn't a modern experience in how to think about this. And businesses and households are saying in surveys that they are experiencing incredibly high uncertainty. There's a lot of research, some of it from the Fed, showing that does lead to businesses and households stepping back from decisions, which of course makes common sense. And you hope that that's something that you go through a phase, and then you know what things become more certain, and therefore people can resume normal economic activities given their understanding of what is the new normal. I mean, your question really is, what if the uncertainty remains high? I think that's a difficult environment. I think people's expected rates of return would have to be higher. I think that would weigh on, to me, investment just in general. If the United States were to become a jurisdiction where risks are just structurally higher going forward, that would make us less attractive as a jurisdiction. We don't know that at this point, but I think that would be the effect.
Well, let me turn to financial markets. We've seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So we've seen volatility also in the bond market. And at a time when usually there's a flight to safety, we saw yields on the German Bund and the Japanese government bond come down, but we saw yields on US treasuries go up. What do you attribute this to?
So I would just say the same thing. I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on, and then 2 months later, you look back and go, that was completely wrong. So I think it's very premature to say exactly what's going on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the markets processing historically unique developments and with great uncertainty. And I think you'll probably see continued volatility. But I wouldn't try to be definitive about exactly what's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
So the Fed in its last meeting slowed the pace of shrinking of its balance sheet. Was this driven by uncertainty about how much reserves and liquidity the market needed, and you wanted to take a little more time to find that out? And flip side, you said the market was orderly. What if market disruptions emerge? Would the Fed intervene?
So we think that reserves are still abundant. So we don't think we're close to the point, particularly close to the point where we would stop. But we were facing a situation in which, for other reasons, there were going to be big flows into and out of reserves as it had to do with the debt ceiling and the Treasury General account. For those of you who are Treasury market people, that'll make sense. But while those big flows are happening for over a period of 6 months, we would actually be shielded from being able to see evidence that we were or were not getting close to the level of less abundant reserves. And so we decided to slow the pace. We thought about pausing, and instead we debated it. It's one of these great debates that we have at the FOMC. We decided to slow the pace instead. And people really came to see the merits of that because, the slower we go, the less the smaller the balance sheet can get without disruptions. And we want that process to continue. And now it's at quite a slow pace. So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very carefully what we think is the right level of reserves. Still plenty of reserves.
What about the international dollar-based system? With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past when there's been a global shortage of dollars?
Sure, absolutely we do. Just for everyone's knowledge, we have standing dollar swap lines with 5 large central banks, and they go to the jurisdictions where there are big overseas dollar funding markets. And in fact, those are overseas markets where, for example, a European or Asian institution is buying an asset-backed security that is backed by loans to American consumers. So in effect, these are loans to American consumers. And we support that. We want to make sure that dollars are available. They need dollar funding to hold those dollar assets. So the way it works is when needed, we lend to the central bank in dollars and they pay us back in dollars. They then pay in their currency. They lend on in dollars. And so we take no credit risk or anything like that. And it supports dollar funding markets. Dollar funding markets are very sensitive during times of crisis, and it's very helpful. The reason we do it is it's really good for U.S. consumers. So we'll continue to do that, just as part of the dollar being a reserve currency, the reserve currency, most important. And we will do that.
You mentioned amongst the issues you were focused on was the U.S. fiscal situation. Well, clearly, U.S. sovereign debt continues to rise. And what are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
So the U.S. federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. Other countries over time have gone much farther, but we're now, we're running very large deficits at full employment. And this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later. In terms of, if I can say from my time working on these issues, it's not the Fed's issue, but if you look at a pie chart of federal spending, the biggest parts and the parts that are growing are Medicare, Medicaid, Social Security, and now interest payments. And so that's really where the work has to be done. And those are issues that can only be touched on a bipartisan basis. Neither party can figure out what to do without both parties being at the table. So that's critical. All of this domestic discretionary spending, which is essentially where 100% of the conversation is small as a percentage of federal spending and is declining it's already declining as a percentage of federal spending. So when people are focusing on cutting the domestic spending, they're not actually working on the problem. Domestic discretionary spending is already going down. I like to make that point because so much of the dialogue that the politicians offer is about domestic discretionary spending, which is not the issue.
Well, let's turn to stability and regulation. Turning to the U.S. financial sector, we still have some concerns about distressed commercial real estate loans on bank balance sheets, whether they've been fully dealt with so far. There's some sense that they haven't. Add to that the very rapid growth in various forms of private credit over the last few years, which arguably haven't been tested by a full-blown recession. How would you put the resilience of our financial institutions at this point and their ability to weather potentially uncertain times?
So I think our banking system is well capitalized with liquidity and is quite resilient right now to the kinds of shocks that it may face. I do believe that. In terms of the commercial real estate, there are, and this has been the case, really we've been working on this for 4 or 5 years now. There are some banks, it's mostly medium and small sized banks who have elevated concentrations of commercial real estate, some of it troubled, and we've been working to make sure that those banks have a plan, have capital, and can absorb the losses that they're doing. So, and that's been going on for some time. The very largest banks don't tend to have high concentrations. So this is a problem that we have known would take years to work through, but we're really well into the process of working through it. In terms of the non-bank financial sector, it's grown enormously. The provision of credit by non-banks has grown just really fast. Most of it has been funded, though, with a private equity-like structure where it's limited partners who are signed up for 10 years to a general partner to invest that money. They're not depositors who can run. You know, your money's committed. And so that funding model is kind of run-proof. That isn't some law of nature, though. So when you do start to see shorter-term funding creeping in, and to your point, though, Raghu, this very fast-growing and now quite large private credit part of the economy has not really been through a significant credit event or significant. It's really grown since the pandemic, and so just for that reason and for how fast it's growing, we have a close eye on it. It doesn't have the same kind of prudential regulation, though, that the banking system has. So we're watching it carefully. And, you know, as I mentioned, it's a more stable funding source to the extent its institutional investors signed up for a long period. But we're watching carefully.
Right. Wearing my banking research hat, actually banks are also involved in funding these institutions in a big way. Yeah. We do know the administration wants to relax regulations in many areas, one of which may well be banking. What can you tell us about the Basel III endgame, so to speak, which is, you know, at this point primarily focused on additional capital for the large banks?
You know, the Fed view, and my view, is that we should proceed to complete the Basel III accord, and we would have to do that, and would look forward to doing that in conjunction with the FDIC and the OCC. But our view is, and I think the bank's view as well, is we should complete that. You need international minimum standards. That's kind of a common good, and you know we're not bound by them. Nothing. The United States has plenty of input into what those accords contain. So our view is strongly that we should complete those, and we could do it, I think, relatively quickly. We're not so very far away from what would be a good, I think, outcome.
Well, let me move to something which is more about technological change and new kinds of instruments, cryptocurrencies. How do you see the potential for more favorable regulations coming on them and potential risks from that for the system?
You know, so we went through a wave of failures and fraud and things like that were the headlines for a couple of years. And I think what you see now is, and during that period, by the way, we worked with Congress to try to get a legal framework for stable coins, which would have been a nice place to start. We were not successful. I think that the climate is changing, and you're moving into sort of more mainstreaming that whole sector. So Congress is again looking at both the Senate and the House are looking at a legal framework for stable coins. Depending on what's in it, that's a good idea. We need that. There isn't one now. And stable coins are a digital product that could actually have fairly wide appeal and should contain consumer protections of the typical sorts and transparency. And that's what the Senate and the House are working on. So that's a positive thing. I also think some of the, we took a pretty conservative, and other bank regulators took an even more conservative perspective on the guidance and rules we imposed on banks. I think there'll be some loosening of that, and I think we'll try to do it in a way that preserves safety and soundness, but that permits and fosters appropriate innovation, but that does so in a way that again doesn't put consumers at risk in ways they don't understand or make banks less safe and sound.
You have a policy review underway. Now, surveys recently tell us there seems to be a distinction between a rise in the level of prices, which is what the public seems to worry a lot about, and the rate of increase in prices, which certainly they worry about in passing, but the Fed worries much more about. That is the rate of inflation. So even though we're coming down to 2%, people remember that over the last few years, it's been over 20% increase in prices. So as you start thinking about the policy review, is there any thought about how you might want to address this sort of challenge, that it's the path of prices as much as the rate of change which matters?
First of all, I think you're right, and I think the public is right. When we say inflation is back down to 2%, 2.5%, and we think that's a good thing, it is a good thing. But if you're paying 20% more than you were paying in 2021, that doesn't help you much. You're still paying a lot more than you used to be paying for the necessities of life. So it's just another way of saying people hate inflation, and it's easy to understand why. All we can really control is a world in which, in the world we were living in, prices don't go down in the aggregate except in extreme times that we don't want to court. So I don't think we couldn't have a framework where we're going to bring prices down by 10% or something. That's not something we'll be looking at. We're essentially looking at the best way to foster 2% inflation over time. And, the things we did back in, the changes we made in 2020 were really innovations around what to do when you're stuck near zero. Now we're well above zero. And, it may be that we still need to have in our framework a way to deal with that. But perhaps the main case is not one where you're dealing with the effective lower bound. And that would be a framework that looks a lot more like the one that we had before 2020.
Now, one of the tools you brought in to deal with the zero lower bound was quantitative easing. But you've also used quantitative easing to fix disruptions in the financial markets. Are you going to be more specific about what your objective is with quantitative easing as you go through this review?
So in the beginning, it's typically we're using it for financial market function. That was the case with the global financial crisis and with the pandemic. And we did try to explain ourselves through the pandemic, and our explanations did change. But I think it's fair to say we might have done a better job of being clear about why we were doing it. And that's something that we're aware of and looking at.
No discussion is complete without talking about AI.
Yeah.
With AI coming fast and furious, it could affect productivity, it could affect employment. There are some people who say we will see for the first time technological unemployment in a serious way with AI. What are your thoughts about it, and how will it impact the Fed going forward?
So like everyone who's been exposed to what it's capable of, it's beyond, I started thinking about it as a version of Google, but it's not. It's like a better version of a person, it can do amazing things. And so the question is, all through the 250 years of technological innovation, technology evolves and people worry that it's going to replace human labor and people will be unemployed. And that hasn't been the case. It may be the case in the short run, but in the long run, what it's done is raise human productivity and therefore living standards. So is this going to be the case where it eliminates more jobs than it creates? And we just don't know. I mean, you come back in 20 years, will it be the case that just people are much more productive in their work because of AI? Or will it be the case that AI has just replaced a lot of people? And I think it's very hard to say, but it truly is remarkable in what it's capable of. And it's, you know, we had a demonstration by a Wharton professor recently, and you speak to it like it's a person, and it kind of responds like a person. And the things that it can do are really amazing. By the way, this is early days. You know, they're talking about even the next couple of years will bring more dramatic breakthroughs. So I think it's one of the 2 or 3 things most likely to bring dramatic change to the economy all around the world in the next 20 years. And I'd say very hard to say how it shakes out.
Let me turn to your job. An important man once said of your job, it's the greatest job in government. You show up to office once a month and you say, let's see, flip a coin. And then everybody talks about you like you're a god. What is it that you normally do every day in the office? Is it fulfilling and, dare I say, enjoyable? And do you really feel like a god?
So I would agree. I think it's the best job in government. I would agree. I really do enjoy it. Yes, I love the job. It's a great honor to serve. It's quite humbling because, you know, everybody makes mistakes. It's just the economy is just not very predictable. All of that is true. And I do what everybody expects me to do. I read. We do a little more reading, though, as part of our daily, my colleagues and I do, part of our daily regime than a typical executive would do. In terms of being a god, I would say that we are blessed with a large number of amply compensated critics who would kind of tend to undercut that. So we don't feel like a god.
So let me go to the more mundane. In that office, what are the key indicators you look for? What are the sources of data that you go to as you try and make up your mind?
So, you know, I'd say start with labor. You know, there's more labor market data and better reliable labor market than probably anywhere else. And it's just a lot of data. And, you know, it's new jobs, it's payroll, it's wages, it's participation. You can break all of those down in different categories. It's a million different things. So there's a lot of labor market data. It's a great field if you're going into economics because there's just so much to do. So then we look at the inflation data. Also, I keep track of global developments pretty carefully, and I talk to my global counterparts pretty regularly just to stay aware of what's going on. Financial markets are really important, and you can and lately something that we're paying close attention to, as you would expect, what's going on around the world in currency markets, in fixed income markets, in equity markets, all of that. For me, though, my background was more in the private sector and as an investor, and for a significant part of my career. And I have to talk to outsiders about what they're seeing and what they're dealing with for it to really kind of fit together for me. I can look at only so much data, and but to really get the story and the narrative, it's more talking to outsiders, and anecdotal data does help things kind of fit together for me, I would say.
Yeah, you told us about speaking with business people last night and getting a sense of what was going on in the Midwest. Let me turn to Fed independence. You've reiterated that you intend to stay in office until the end of your term, and that certainly reassured many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law. Congress has, in our statute, we're not removable except for cause. We serve very long terms, seemingly endless terms. So we're protected in the law. So, Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties and in both sides of the Hill. So I think that's not a problem. There's a Supreme Court case people will have read, probably in today's journal, at which the Supreme Court may decide whether independent agencies generally, whether they're authorizing laws, can contain a provision that prevents the president from firing members of a commission other than for cause. And that's a case that people are talking about a lot. I don't think that decision will apply to the Fed, but I don't know. But it's a situation that we're monitoring carefully. Generally speaking, Fed independence is very widely understood and supported in Washington, in Congress, where it really matters. And, the point is we can make our decisions, and we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to achieve our dual mandate goals as we can to best serve the American people. That's the only thing we're ever going to do. We're never going to be influenced by any political pressure. People can say whatever they want. That's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors.
非常值得尊敬啊，在阴阳川普的啊。
Well, I have time for one more question. I know the question that's on all your minds. What are you going to do on interest rates next? But I'm not sure that and I'm not sure you would tell even if you knew. So I'm not going to ask that question. The question I want to ask is a more personal one. What is it that you like to do most at home after an exhausting day flipping coins in the office?
I play one of my guitars. I do Zoom calls with my kids and my grandkids, and I go to the gym a lot too, just to stay in shape.
We need you healthy. We need you healthy. Thank you very much, Chair Powell.
Thank you.
And please join me.
太搞笑了。我们看后面还有什
On
么？
behalf of the Economic Club of Chicago, thank you, Chair Powell and Dr. Rajan, for such a wonderful conversation. You are a national treasure, and I hope all of us can see how important Chair Powell's role is in our business and personal lives. And thank you for sharing your important insights with us.
OK， 好，跟大家总结一下啊。那么刚刚这个主持人问的最后一个问题呢，是你每天抛完硬币之后，你回到家，就是很疲惫，干什么呢？他就是说这个play 一下 guitar， 就是这个弹一弹吉他呀，给他的这个儿子孙子们就是视频会议啊，仅此而已。好，那这个直播呢到这里呢就算是结束了啊，非常非常感谢大家的陪伴。那么咱们现在直播间的人数也是下降到了430多人啊。那么我简单跟大家回顾一下啊。那么现在我们看一下这个他讲的是什么呀？说这个关税的目前的这个关税确确实实是远超美联储的一个预期啊，远超美联储的预期。所以说呢啊，那么关税啊远超美联储的预期啊，所以但是呢他们也要看啊，哎，这个搞错了，这个不能放在这儿，这个会挡住咱们的屏幕，对吧？我看一下咱们屏幕现在显示的是比特币的价格，对吧 ？OK， 好。那么说这个今年的2次的降息的预期还是没有变化，因为现在还是看到就业数据非常强劲，然后这个 CPI 的这个数据呢还是接近2%，所以说当下今年的预期呢 PCE 啊就是这个是2.3%，然后核心PCE 是2.6%，那么经济有可能会疲软，因为这个通胀会上升，但是呢经济疲软和通胀上升就把 这个相互抵消了，对吧？那他又讲到什么汽车制造业未来数年呢都会受到影响，因为关税战呢会导致原材料的价格的上涨，对吧？那这个也是 make sense 的。然后又讲到移民，过去几年这个移民是这个经济增长的一个重要的一个因素吧。那总之今天的这个行情，我们看一下这个行情，在它这个演讲之前呢，可能会有一个降息的预期，那短线资金迅速进场，然后呢把价格推到了85400多，但是呢这个在演讲的过程当中没有提及到马上增加一个次降息，所以说这个短线的这个资金呢迅速就跑了。但是讲到差不多就是的主持人问话的时候，差不多到底部了，对吧？那我们看到83200多就是底部了。然后我正好刚刚也是在咱们这个聊天区域，我告诉大家我的 ADA 啊 IWB 的空单也平仓了，那目前来看是稳步上升。那总而言之，我们今天来看，就是鲍师傅的这一顿操作呢，也是非常的抽象的啊。那没有给市场带来重大的信息，反而把这个美股砸得更狠了一点啊。那本来这个标普500是只跌了1%点几，现在是双倍的这个跌幅啊，跌了2.12%。然后我们看到特斯拉刚刚就讲到这个汽车制造业吧，会受到未来数年啊，他说是这个 few years， 还用哪个词我给忘了，就是数年之内都会受到影响。那么特斯拉的股票今天暴跌呢，也是情理之中。那么我们看到英伟达也是啊，英伟达今天跌的也是蛮猛的。那唯一强劲的，刚刚也是说到啊，这唯一强劲的只有这个跟着比特币走的 MSTR。那目前我手里面的美股呢，只有 MSTR 这一只股票。然后呢，这个比特币现在反弹的还是非常好的啊。好，那咱们来看一下直播间里面大家有没有什么问题啊？没有问题的话呢，咱们今天的这一次直播就差不多了啊。那感谢大家的陪伴，然后没点赞的大家呢点赞，然后呢给咱们这个频道加油，订阅一波好不好？然后我们看一下这个直播间里面大家，他已经讲完了啊。鲍师傅求稳啊，黄金怎么办？对，刚刚的主持人在问他的时候，鲍威尔有一次，就是倒数第二个，就是大家都在鼓掌的时候，我就说他的阴阳川普的那一次啊，他说我们美联储这个工作呢是不受到任何政客的影响啊，那政客可以随便说他想说的任何问题啊 ，you can say whatever you want， 但是呢你影响不了我，那我该有动作的时候，该降息的时候就降息，该加息的时候就加息。所以说现场的反应呢也是非常强烈的，大家都是纷纷鼓掌啊。虽然是说阴阳了一下川普，但是这个怎么说呢？就是对于我们这个预期来讲还是落空了，对吧？那我们看一下这个目前的当下的价格呢，来到了84430啊。看看直播间大家还有什么问题吗？没有什么问题的话，那么美股怎么看啊？美股还会继续下跌。那目前唯一市场里面能够硬得起来的就是 MSTR， 刚刚已经讲到了啊。那其他所有的都在跌。那我们事实也是看到这个样子啊。美股会受到这个影响非常大。为什么比特币今天涨呢？是因为比特币有这个避险的属性了。那我们看到黄金涨得更猛，对吧？那黄金，我们看一下，黄金好像没有受到它的任何的影响。这个事情呢，我觉得也是有一点那什么的啊。黄金他讲话的时候是我这里的10点半，对吧？稍微跌了一点点啊，继续掉头向上啊。黄金今天再一次创新高3338。那么美股啊，我们看刚刚有朋友问美股怎么看啊？那我们看一下这个美股的这个恐慌指数啊。恐慌指数本来是昨天的时候收盘的时候跌到了28、29的样子，那今天再一次回到32。那通常情况下，我们认为美股的这个 VIX 这个恐慌指数呢高于28的时候呢，就是不太好的一个情况，就是要做空啊。但是呢，美股里面呢，我只有 MSTR， 我也没有开什么期权的这个 put， 也没有这个做空它。那我们再看一下这个直播间，大家还有什么问题啊？明天怎么看？总之呢，比特币啊，大家记住啊，比特币只要它跌得很猛，那你就不要去做空它了，那你就买点现货或者是开多单。但是我建议大家开比特币的这个合约的话，不要开太多的杠杆啊，因为拉盘起来的也是非常猛的。那么 其他的山寨币啊，为什么我持续不断一直非常执迷于空这个爱达币呢？因为它垃圾，对吧？那你可以去空任何的山寨币，但是不要去空比特币啊！我从来不敢啊，不敢空，哪怕空的话，也就是几分钟的事儿。看到这一波的行情，它往下走了，对吧？那做一波小的一个趋势。那其他的情况下，我从来不敢空比特币的啊。我这个怎么？哦，好。layers 力哥 layers 怎么说太硬了 ？layers 是什么东西啊？垃圾山寨币、新币都不要碰啊！大概率横盘了吗？今晚多到86。好，大家再点一波赞啊，订阅一波啊，给咱们这个视频鼓鼓气。然后这个礼拜呢，应该还有一次直播的机会啊。那我上次咱们这个在另外一个频道我预告过了啊。那回头我再找找，应该这2天还有一次直播的机会啊。那尤其是这个川普这边关税还没有完，这个关税战呢，我觉得还要且得打一阵了啊，打一阵了。所以说关税战如果说没有一个好的一个结果的大前提之下，整体的金融市场都是波动的。但是在这个波动当中，受益最猛的就是黄金以及比特币。二饼没有用啊。什么时候啊？我告诉大家一下啊。那么我的观点，个人观点啊，什么时候美联储真正的降息了，真正的 QE 了啊，量化宽松了，放钱了，放水了，那山寨币才有行情。当下的市场里面，我们只能去持有比特币的现货，其他的什么各种饼啊都没有用啊。说的再好，吹的再牛逼，没有用啊。以太坊我也很难受，以太坊我很多没有卖，4000多的时候，卖了一点点，当时卖了一点点，因为是什么事情我给忘了。很长时间了，上一次直播的时候好像提到过啊。山寨币要等降息啊，市场里面没有钱的话，山寨币根本就没有啊，都是空话。任何的博主告诉你啊，什么什么抄底，什么什么山寨币，狗屁啊，千万不要乱听他们的话，狗屁不通。这里面就不点名批评了啊。那咱们这个直播间刚刚有朋友加了会员，说这个受到某博主说4000块钱的以太坊是最后是上车机会，然后被他坑了一波。bullshit 啊，狗屁狗屎不通。那么这种博主你就拉黑他，不要看他的视频了。现在当下的这行情，只要美联储不放水，这个市场就是缺钱的。那尤其是现在这个关税战，市场更加缺钱。很多的人啊，那我们也看到，如果说你周围你在中国大陆的话，或者是在东南亚是任何一个国家周围有工厂或者认识工厂里面上班的人，你问问他们最近这个受到贸易战的影响大不大啊？那你就知道啊，这个经济啊不会很好，当下的这个情况啊，当下情况经济不好，缺钱，那山寨币怎么会有行情呢？大家都会有，就是认知高的人呢，或者是这个资金大的人，只敢买比特币啊，什么山寨币都不敢买，或者是他们只敢买黄金，美股全部都撤出来了。那么昨天还是前天的时候，我看到有一个美股的一个机构发了一个报告，给他们这个客户发了一个邮件啊，让他们撤出所有的美股的资产。这个呢也是一个信号啊，所以说刚刚问美股怎么样的朋友，你大概就知道了，这个美股现在应该唯一一个能做的美股就是 MSTR， 因为它跟比特币相关。那如果说这个市场里面还有跟黄金挂钩的一些股票，你也可以去买一下这个黄金，看看这个美股市场里面有没有黄金的这种加杠杆的股票啊，类似于 MSTR 的存这个。他们就是做黄金 ETF 的，或者是做这个金矿的，等等，这种股票呢，你去看一看有没有机会。其他的就不要碰了，尤其是汽车啊，那鲍威尔都主动提出来了啊。对，刚刚还有一个总结的时候忘了一点啊，鲍威尔今天提到了，主持人问到了他问关于这个 crypto， 关于这个加密货币怎么看？那他说这个前面的时候，每天看新闻都说这个 crypto 这个加密世界啊，各种各样的欺诈啊，这种诈骗案啊，层出不穷啊。但是这个东西呢，还是有它的好处的。当然了，要在这种合理的法律的框架之内来执行。比如说一些稳定币的一些这个行情呢，这个不是行情啊，就是这种未来呢还是挺看好的啊。那他说到了这个。stablecoin 啊，我听到了一点，等一下我再看看他这个讲的这个原文到底是怎么讲的。咱们今天讲的就是我全靠我这个记忆，然后 简单的一些笔记跟大家总结。那因为我没有看到他的演讲稿，等一下我再浏览一下，回头在咱们这个频道呢再做一期视频给大家补充一下啊。那可能我有一些漏听的，或者是这个没有注意到的，我笔记里面没有记到的一些点，那回头在这个视频里面我会给大家补上啊。好，那咱们来看一下这个黄金应该要跌了吗？有一句话我不知道大家听没听过啊，乱世黄金，盛世古董啊。那么越乱，这个世界越乱，黄金越贵越值钱。因为这个大家都是想到一块儿去了，尤其是认知高的人，那么会把这个资金买成黄金来避险。那么现在避险的资产里面多了一个比特币，所以说我们看到比特币也是非常硬的。那虽然这个比特币的波动性比较大啊，尤其是受到这个鲍威尔的演讲的影响比较大，那我们没有办法，但是时间会证明一切。刚刚这个直播间有朋友说了，非常感谢阿力，时间证明了实力啊，加油！非常感谢大家今天的这个陪伴啊，咱们当下还有336人在线啊，没订阅的朋友呢，欢迎订阅一波啊。然后你订阅完了之后，去看看我之前讲的一些视频啊，尤其是最近的大概7、8期视频呢，咱们都是非常踩准了这个川普总统以及他的这个领导班子里面的各种各样子的这种政策的这个脉络啊。851的空拿到哪儿？你空单的话，如果短时间之内跌不下去，我现在看的是5分钟图啊，那我们还是看这个图的话，我感觉这一个呢是这一根1个小时线这一根阴线，它是因为鲍威尔演讲导致的。那么这个呢，它会回归到这个上面的这个继续回归到这个趋势上去啊。那么短时间之内还会再回到这个趋势上去，所以说空单咱们刚刚这个我自己的爱达币的空单都平仓了嘛，你现在空单还拿着它干嘛？就是我是不会去空比特币的啊，我是只做多，只买现货比特币啊，这种做多，然后呢就是用比如说空垃圾爱达币赚到的钱买成比特币的现货。然后如果说是滚仓的话，那么我比特币的这个持仓会越来越多，然后我的爆仓的这个价格呢会越来越高，所以说越来越安全。当然了，我的杠杆也很低啊，我的杠杆是0.88倍。那我自己跟大家说一下，我自己做空爱达币是拿着1个比特币进场的，现在快3个了啊，也就是在最近短短的2个月的时间不到吧。那大家去看我 YouTube 上面的这个社区的帖子。几乎每一次平仓我都会有截图发到这个社区里面啊，大家去看一看啊。主播，我刚给你的地址打赏了100U 的比特币，虽然不多，但也是没打。你这不是搞笑吗？你没打。每天你的频道上会有比特币策略视频吗？咱们还有另外一个频道啊，你去我的频道的主页，然后有一个日更的一个频道，我打算会把一些这个走势的分析啊、技术分析放到那个频道里面。那目前还没有做，因为我现在还是慢慢的在搞。主播有抖音吗？我有一个助手啊，帮我在同步一些短视频，然后呢把我的长视频剪辑成短视频再放。那个不是我自己在运营的啊。现在可以多吗？我告诉大家，我如果说加杠杆做比特币的合约的话，我会在它跌得很狠的时候，像这种，我为什么在这个地方在接近底部的时候，我也平仓了它这个空单的呢？是因为这种走势类似于一个你把它连成一个线的话，类似于一个抛物线啊，然后它的这个势能完全释放完毕，那这个时候你就不能再去空它了，基本上就是这个点。其实我是平仓空单的时候，爱达币的空单的时候，其实言外之意就是可以做多了嘛，对吧？那基本上就是在这种急跌的之后，我会去做多它那这种跟大家说这种技术分析嘛，你去看一看阿布的视频嘛，阿尔布鲁克斯，我多次跟大家提到过啊。那关于阿尔布鲁克斯的这些理论的 它是因为比较繁杂、比较复杂。那么关于这个呢，我自己还没有能力去跟大家去讲这个，因为我自己还在内化吸收的一个过程当中啊。什么时候我感觉我自己学的差不多的时候，我可以跟大家分享啊。当然，这个有可能是半年或者1年之后的事情。主播，我买了 SQQQ， 你觉得应该什么时候卖出？我是偏中长线的啊。主播给我0.2比特币，你就是我爸爸。操，我不缺儿子。SQQQ 这个股票我没有做过，我也没有研究过，因为我对我上一次研究美股的时候都是好几年前了。那我对美股说实在话啊，咱们实话实说，看的不多。SQQQ 我只能我只能通过裸 K 线来告诉你一些啊。今天，这个到底是干什么的 ？Pro Shares Ultra Pro Short， 哦，这个是做空的，对不对？这个是做空什么的呢？你刚才问问题的这个朋友，你告诉我一下 SQQQ 是干什么的？这个是做空美股的标普500的吗？哦，3倍空纳斯达克 ，OK，3倍空纳斯达克，哦。还有这么好玩的股票呢？这个我要收藏一下啊。3倍空纳斯达克，哇，这个涨势蛮好的嘛。OK， 如果我买了这个股票的话，我会在这一根阴线的中轴的附近啊，45附近跑掉。在这个地方，因为我们看它的整体的一个走势啊，这是这个周线图啊，整体的走势还是下降的，对吧？那现在呢，是因为出现了这种不可预测的关税的事件，对吧？然后呢，它突然往上涨，那么好吧，那我觉得应该就是在这个中轴的附近吧，而且我们看前面这个地方是48，这边有个压力位也上不去，然后还有一个小的压力位在这个地方39啊，40附近吧，40附近，我不知道你的成本价多少啊，反正这个股票这个股票还挺有意思的，3倍空的纳斯达克，那美股里面还是有一些好东西的啊。狗狗币可以长拿嘛？可以长拿。狗狗币是，狗狗币你永远没有办法通过什么基本面来分析它。我们要等一件什么事情呢？就是马斯克啊，马斯克如果说从这个美国的这个能效部里面退出来之后啊，就是把他全部的精力放在特斯拉的车的上面的时候，然后那个时候我估计是特斯拉应该是跌的差不多的时候啊。然后我是比较喜欢看这个特斯拉的股票的啊。我们说这个狗狗币一定要跟特斯拉放在一块儿说啊。那特斯拉我们现在看到的也是这个周 K 图，特斯拉我现在没买啊，因为我就算是我们一家人，我跟我老婆就是做投资做这种，我们的思路也是不一致的，因为这个东西确确实实是那什么。我老婆在前几天跌的差不多的时候就开始进场买特斯拉，但是我觉得还没有跌到位。我自己的资金是没有碰它啊，但是我还是挺喜欢特斯拉的股票。我们从这个基本面上来分析的话，特斯拉应该是受到关税的影响比较重的一个因为是造车的企业，然后原材料铝合金啊什么的都是从中国大陆进口的。然后最关键的是特斯拉车里面最关键的一个零件或者是这个部件吧，它是电线，对不对？电车里面的电线。几乎99%都是 Made in China， 都是中国制造的。那么这个时候关税战对于特斯拉来讲呢，是一个非常不好的一个情况啊。那我觉得我愿意去进仓买特斯拉的点位呢，应该是在200以下啊，170到150到170之间吧。那我会在这个地方进场去捡的。那个时候我们在等马斯克，从这个不要去做政府的这种官员了，就老老实实做自己的business，做自己的造车的行业。到时候 几乎它如果说退出来啊，也就是明年嘛，2020年的时候吧，从这个能效部部长退位之后，全部的精力和身心投入到造车的行业里面去。到那个时候呢，这个混乱呢也到了一定程度，对吧？那马斯克也回归了，那特斯拉的股价呢也就跌到位了。然后呢，他那个时候把这个特斯拉的这个造车，再给往上带一带，股票再带一带啊，再创一个新高什么的。然后，心情一好，喊狗狗币。那我估计啊，狗狗币到那个时候才会有一个大的行情。那我们目前来看，狗狗币也是挺惨的啊。那还是那句话啊，市场缺钱啊，山寨币起不来，好吧？那大家记住这一点就行了。Solana 非常好啊，Solana 一定要拿住啊，尤其是在120以下的这种点位的时候，150以下我觉得都是安全的。如果说你能在90多，前面不是跌到90多的时候嘛，如果说你在那个时候抄到底的话，太厉害了。2倍做多恐慌什么时候出比较好？我不知道你这个问题是什么啊？交易所能控制走势吗？交易所控制不了走势啊。交易所呢只会是有可能是成为你的做合约的对手盘，那尤其是一些小的交易所啊。现在跟大家说一下，这个小的交易所大家就不要用了啊，要用的话也是大的交易所啊。好像继续下跌，我们看看，比特币又往下走了。好吧，让他消化一下吧。这个刚刚的这个鲍威尔的讲话，这个威力还是蛮厉害的。其实不是威力啊，是我们看到从今天早上6点多钟啊，我这里的时间啊，是有短线的资金进场了，他们在赌鲍威尔会不会增加一次降息啊？但是鲍威尔上来之后没有这个落空了嘛，落空了就没有。然后他们就跑了嘛，短线资金操作，我就没关系啊，整体的结构还是挺健康的。我们看1个小时图或4个小时图的话，都是很健康的。1个小时图很难看，还是看4个小时图吧，也是挺难看的。我去，一波2波，等它稳一稳吧，等它稳一稳。合约亏的钱是被谁赚了啊？大部分是交易所，对手盘嘛，对手盘。Solana 117拿着现货，近期还能做多合约吗？哎呀，近期的话，这我不是说了吗？山寨要看美联储嘛。你现在都很难啊，都很难。降息2次，几月份降啊？6月份大概率是6月份和9月份吧，2次降息。好，那我觉得咱们今天的直播应该差不多了啊，应该差不多了。大资金的话，还是不要去。哎呦，这个做合约这个东西呢，很难讲的哈，就是真的是有精准爆破的那种，就是每一个交易所它都有自己的一个这种盯盘或者是干嘛这个合约的这个盯数据的一个部门。那你如果说一个很小的一个交易所，大家都是几百 U 几十 U 的玩的话，你突然来了一个几十万 U 甚至几百万 U 的话，那肯定是一块大肥肉，那么早晚会搞你啊。昨天我还看到有个博主分享了，在抹茶交易所，那么他们有450万的资金，然后不让提现了，说这个他们的资金有问题，然后还找到了这个宝二爷来处理这个事情啊。那这种交易所啊，我在我的会员群讲到过，好几个这样的交易所呢，都是被东南亚的灰产的大佬给收购了，然后呢，就不要碰了啊，这种交易所就不要去用了啊。有好几个，那这个呢，我只能说到这里啊，不能说太多啊。OK，好，那看看大家还有什么 疑问吗？没有的话呢，咱们今天的这个直播先到这儿啊。那如果说你现在是通过推特啊，通过 X 平台看我的直播的话，那可能下一次我就不在推特上面直播了，因为这个我买的这个Restream 的这个，我刚才也发推文了啊 ，Restream 的这个软件呢，它是支持在2个平台上同步直播，但是我的推特我今天发现掉线了3、4次，那然后我就把它这个服务呢给 cancel 掉了，就取消掉了。那下一次我们只在这个 YouTube 上面直播啊。那如果说你没有订阅我的 YouTube 频道的话，去这个我刚刚也写推文了，大家呢去订阅一下我这个 YouTube 频道，然后呢咱们这种大事情的时候呢都会跟大家来直播。好，那么咱们今天的直播先到这儿吧。如果还没有订阅的话啊，订阅一波咱们这个 YouTube 频道啊，咱们的主要的还是在 YouTube 上面啊。非常非常感谢我用的软件呢是 TradingView 啊，在我的视频的录播的视频的下方都有这个推荐的链接，你可以点进去之后去注册啊。你可以去花钱，也可以去免费，大部分的用户都是免费都可以够用了啊。因为我是用的收费的，是因为我需要看的指标比较多，但是我觉得普通用户用免费的就可以了啊。好吧，那咱们今天先到这儿了啊！再一次感谢大家的陪伴，然后呢，没订阅的订阅一波，点赞一波啊！我们下一次的直播再见。我今天的在晚些时候呢会做一期总结的视频在咱们这个频道啊。好，非常非常感谢大家，大家这个东八区的啊，早点去睡觉啊，休息好了才有动力去赚钱，对吧？好，那我们先到这儿了啊。